Welcome back to the Deep Dive. Today we are undertaking a fascinating deep dive into a global financial behemoth known as Ant Financial, the company behind Alipay.
It's such a critical story.
It really is, because it's not just about a better way to do finance. It's about how solving one huge foundational problem, in this case, a total lack of trust, can launch an entire economic ecosystem.
To really get it, you have to go back to, say, the early 2000s in China. The internet was growing, sure, and you had platforms like Alibaba's Taobao trying to get off the ground.
But commerce was basically crippled.
Utterly crippled. We're talking about an e-commerce environment just defined by massive distrust.
And when you say distrust, you mean that quite literally, right? If you're a buyer in one city and the seller's in another, what do? There's no established system.
There's nothing. I mean, are you going to send cash in the mail? You had rampant online fraud, a huge problem with counterfeit goods. There was no real guarantee that if you sent money to a stranger, you would ever see that product.
It's a vicious cycle then.
Exactly. People won't shop online because they can't trust the transaction. And that stifles the growth of the entire marketplace. For Alibaba, this was the single biggest, I'd say, existential barrier they faced.
It's so easy for us, in markets with decades of credit card laws and banking infrastructure to forget what that looks like when that basic trust just isn't there.
Absolutely. The system was built for face-to-face cash exchanges, not for digital ones between strangers hundreds of miles apart.
So our mission today is to trace this whole evolution from that first ingenious solution back in 2004 all the way to the huge ecosystem payments, credit, wealth management that became Ant Financial.
And critically, how it achieved financial inclusion on a scale nobody had ever seen before.
Okay, let's unpack that initial breakthrough in 2004. This is when Alibaba launches Alipay. The solution they came up with was, in hindsight, it seems so simple, an escrow service.
Simple in concept, but absolutely revolutionary for that market at that time. They essentially put Alipay right in the middle, a mandatory trusted middleman for every single transaction.
Walk us through the mechanics of that, because this really is the bedrock of everything that came after.
Certainly. So a buyer makes a purchase on Taobao. The money doesn't go to seller, not directly.
Okay.
Instead, Alipay holds the buyer's funds securely in escrow. The seller gets a notification saying the payment is secured, ship the product.
Yeah.
And only after the buyer gets the product, checks it, and confirms they're happy with it. Only then does Alipay release the money to the seller.
That's a huge confidence booster. It just completely flips the risk.
It does. Before, the buyer risked everything. With Alipay, the seller just risked waiting a few days for payment, which is a manageable business risk.
Yeah.
And that one mechanism, it fundamentally solved the trust crisis. People who were, terrified of fraud suddenly felt confident shopping online. That single innovation is what allowed China's e-commerce market to just explode.
You really can't overstate how important that was. But of course, Alipay didn't just stay as an escrow service.
No, they saw a much bigger opportunity.
They realized that controlling the payment flow for e-commerce was step one, but step two was becoming the central digital wallet for the whole economy.
And this is where it gets really interesting, especially when you compare it to Western markets. In the US or Europe, we had these deeply entrenched card networks, Visa, MasterCard, and so on.
Right. The infrastructure was already there.
It was there, and it was powerful. China, on the other hand, largely lacked that. You didn't have widespread adoption of those expensive point-of-sale card terminals in every shop.
So instead of trying to fight the card companies or convince all these banks to adopt their system, they just went around them.
Completely leapfrogged them. Decades of infrastructure just bypassed. They saw that the mobile phone was everywhere, and that was their opening.
And their solution was the QR code.
The QR code, it was incredibly fast, unbelievably cheap to implement. It required zero expensive hardware, just a printed code on a piece of paper and a smartphone.
The accessibility of that is just beautiful. You don't need a bank account, not even a credit card, just a phone and the app.
Exactly. And that's what drove the incredible speed of adoption. Suddenly, mobile payment wasn't just for fancy department stores.
It was for everyone.
The street vendor selling noodles, the taxi driver, the local market stall, they could all accept digital payments instantly, with basically zero cost to get started. It pushed China into a mobile-first, cashless society at walk speed.
Okay, so now they've mastered the payment rails. They're handling transactions for hundreds of millions of people, and that generates this unbelievable continuous stream of data.
And that's the moment the light bulb goes on. They realize they're not just a payment company anymore.
They're sitting on the foundational data layer of the new Chinese consumer economy.
That realization is the genesis of Ant Financial in 2014, which later became Ant Group. The mission changed from just enabling payments to building a whole financial ecosystem.
We hear that word ecosystem thrown around a lot. But what did Ant actually bring together under that umbrella?
It was the full suite. Payments, of course, that was the core. But then they added wealth management, insurance, microlending, and maybe most importantly, their own credit scoring system.
So they were integrating every key financial touch point into a single app.
It's almost like a shadow banking system, but one fueled entirely by data, not by, physical branches.
What's fascinating here is that data advantage.
It was everything. Traditional banks rely on, pretty limited historical data, salary slips, mortgage history, things like that.
Right.
Although they were seeing where you bought your coffee, how reliably you paid your utility bills, all of your consumption patterns, right through Alipay.
So they could build a much richer picture of a person's financial health.
Exactly. And that let them evaluate risk and predict creditworthiness with a speed and an accuracy that the old banks just couldn't hope to match. They could serve millions of people that traditional finance had always called too risky or credit invisible.
Let's delve into some of those specific innovations because they really did redefine what accessible finance even means. You have to start with Yubao, right? Back in 2013.
Oh, Yubao was a masterpiece of design. It translates to something like leftover treasure.
Leftover treasure, I like that.
It was a money market investment fund, but its entire design was about removing friction. Normally investing requires minimum deposits. It's complicated.
Right, it's intimidating.
Very. Yubao let users sweep the leftover change, literally the spare cash sitting in their Alipay wallet, into this investment fund with just a couple of taps on their phone.
That is just profound. It turns investing from the specialized activity into something as easy as flicking a switch.
And the result was massive. Ordinary people, for the first time, got access to an investment vehicle that was simple, totally liquid. You could pull your money out anytime, and it offered much better returns than a standard bank account.
I can imagine the uptake was pretty quick.
It was immediate. Yuebao scaled so fast that within just a few years, it had become the world's single largest money market fund. The sheer volume of money just shows you the pent-up demand for tools like this.
So if Yubao solved easy savings, the next logical step was easy credit. And that was all powered by their data engine with Zima Credit.
Zima Credit, or Sesame Credit, is arguably the most transformative piece of the whole puzzle. It's an alternative credit scoring system.
How does it work?
It analyzes all that user behavior we talked about, spending habits, bill payment history, even your social connections in the app, to create an AI-driven score of your reliability. It completely replaces the old model of collateral and credit history.
And that's what made the credit invisible visible. People who'd never been able to get a loan from a bank suddenly had a validated score.
Exactly. And with that score, they could access all sorts of modern services, renting things without a deposit, borrowing bikes, and most importantly, getting microloans through Ant's own lending products, Huaibei and Jibei.
What were those?
Huaibei was like a digital credit card for financing purchases. Jibei offered small, unsecured cash loans. The key thing was the speed. A loan decision could be made almost instantly, all automated, based on that Zima score and your transaction history.
That is financial inclusion at a scale that traditional banks with their paperwork and loan officers could just never match.
Never.
So by 2020, this thing is a global giant. Alipay has, over 1.3 billion users? Not just in China either.
That's right. Ant started exporting their blueprint. They formed partnerships across Southeast Asia and India, places like the Philippines, Pakistan, Thailand, helping local companies build their own digital payment ecosystems based on the Ant model.
They were basically exporting the future of finance.
They were. But when you get that big, that fast, you eventually run up against the old world's rules.
And that brings us to the sharp turn in the story, 2020. Ant is on the verge of what was set to be the biggest IPO in history, valued at over $300 billion. And then the regulators step in.
This is the huge regulatory turning point. Just days before the listing, the IPO is suspended. The core issue was Ant's size and, its structure. It was acting like a bank, a massive lender and insurer, but it was regulated like a tech company.
So the regulators were essentially saying, hold on, you're carrying too much systemic risk to operate without the same rules that traditional banks have to follow.
Precisely. The concern wasn't just about Ant's valuation, it was about stability. Ant had grown so big that if it ran into trouble, the fallout could hurt the entire economy.
This raises an important question, then, about what they were being asked to do.
The regulators demanded that Ant restructure itself as a financial holding company. This meant much stricter rules, forcing them to hold more capital in reserve, just like a bank has to. It was a clear signal that the era of, lightly regulated hypergrowth for these fintech giants was coming to an end.
What's fascinating is that the very success of their data-driven model is what triggered the crackdown. They essentially became too big to fail without being properly regulated for it.
That's the core tension. They achieved incredible financial inclusion, but in doing so, they took on risk at a scale that the old regulatory framework just wasn't built for.
So what does this all mean? When you look at this entire trajectory, what's the big takeaway for the future of finance?
I think Ant's influence is really twofold. First, they proved you could entirely leapfrog existing infrastructure. You could use simple tech, like a QR code, to achieve universal scale. Second, they created the definitive blueprint for the super app. One place for payments, savings, credit, all living together, all fueled by consumer data.
The lesson seems to be that solving one single, very real point of friction,
like trust in e-commerce,
can unlock a massive engine for economic growth and inclusion. The Ant story shows that real fintech isn't just about novelty, it's about solving real-world economic exclusion.
Absolutely. They use data to empower hundreds of millions of people who were just completely ignored by the legacy system.
But that heavy reliance on data, which was the engine of all this success, it does leave us with the provocative question for you, the listener, to think about. Ant showed that big data and AI could effectively replace centuries of tradition around collateral and bank assessments for loans. So if your data, your behavior, is the new collateral, what ethical responsibilities do these huge ecosystems have to maintain the fundamental trust they were built on in the first place?
That balancing act between inclusion and responsible governance, that's the big challenge for every super app from here on out.
Until next time, keep digging deeper.